It's 5 o'clock in London, it's midday in New York, 6 p.m. in Paris, midnight in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID livestream, Series 29, Episode 1, that is in the aggregate, Episode 169, starts here. One key story that we're going to bring you today, and I want to say a huge welcome to Connemara, the people behind EP3, a sensational trading engine. I'm delighted to welcome them as sponsors of Exchange Invest newsletter, which is essentially therefore also indirectly subsidizing this live stream and the production team behind it. I'm really delighted to have a new sponsor to the Exchange Invest newsletter. Don't forget you can sign up at exchangeinvest.com, and particular Connemara, because they're on a hot streak right now delivering awesome systems to power markets in all manner of products across the world. Their latest client announcement just a couple of weeks back was Architect X out of Bermuda with a fascinating new futures in digital assets proposal. And of course, before Christmas, also, Connemara installed the software at IBKR's, Interactive Brokers, Forecast X, which promptly traded more than $500 million worth of contracts in a matter of weeks on the US presidential elections in November, when the CFTC was finally forced to open the political risk transfer market. Connemara also powered the Chicago Climate Exchange, and they were powering the AFX, which was recently acquired by the Intercontinental Exchange. And of course, as you'll remember, those were both the product of that incredible Renaissance genius, Professor Dr. Richard Sander, himself a former guest on this show. I'm looking forward to welcoming back the Connemara team to talk more about what they're doing in the course of the next few months. But in the meantime, don't forget to check out our previous live stream with Connemara. That was a fascinating insight into just how they're approaching the world of developing systems for the burgeoning world of exchanges, market structure, and indeed brokers and other entities around the world. So thank you for sponsoring Exchange Invest Connemara. It's great to welcome you alongside our other key sponsors, NASDAQ, BMLL, and Sinara. Today's show, ladies and gentlemen, it's a cracker. We're welcoming back someone who's been on this show a couple of times before. Ira Harris has over 47 years experience in all areas of commodity trading with broad expertise in cash currency markets. He's an active macro global trend trader, a regular guest on currency and global interest rate markets as an analyst on Bloomberg CNBC, and indeed, of course, at least twice in the past on IPO-VID. Check those out. They're great stories altogether. Ira, welcome back to the show. Where in the world are you today?
Where in the world? I'm at Carmen, San Diego. No, I'm in Arizona today, Scottsdale, Arizona. Beautiful. It's cold. There's actually frost all over the place, but it is still beautiful. Always beautiful.
Magnificent to hear altogether. Right now, I am in the Caribbean, although, ladies and gentlemen, this show is being recorded for the simple reason that I've got a pretty crazy travel schedule next month and therefore, or this month, and indeed, it's going to be a case where I'm going to be in, hopefully, Nairobi by the time you actually are watching this live, preparing for the AFM conference, where Exchange Invest is proud to be a sponsor. So, Ira, the thesis of today's show is very simple. We're looking at the new era, for want of a better term. I mean, how the world has changed with the arrival of President Trump in the White House. And I ought to say a quick ground rule. This is not a discussion about politics, ladies and gentlemen. It's not a discussion about political policy. It's not a discussion about the rights and wrongs, the good or bad of Donald Trump. Whether you like him, whether you loathe him, whatever your views on Mr. Trump and all of his administration, the simple fact is they're the administration we have and we're going to have for the next 4 years. So we want to talk about how that's changing markets and how we should be looking at them over time. So Ira, talk me through it. You've seen quite a few presidents come and go. It's a remarkable energy that has revolved around the first few weeks of the Trump presidency.
It is an energy. Well, we see it as an energy because he's so adept at manipulating the media, and that's not a nefarious term. That's just the way he operates, because he really was behind the curtain for so long that he got such a good look at it, and he understands. And I think that's part of the things that people can't stand, is that he does understand them very well. And he's a salesman. He's always been a salesman. He's been a salesman for 45, 50 years that I've been aware, 45 for sure that I've been aware of him. And he knows how to push those buttons, and they come like mice seeking out the cheese. And he brings them to him. So it creates a lot of energy.
It's true. I mean, it's remarkable altogether what he does. And I agree with you. I mean, he is such an incredible showman. He comes out of a sort of amazing era of disco in New York and seems to be still there, right down to the YMCA and the Village People. And actually, I must say, the only political point I would make was the winners to me out of the inauguration were the Village People, because they came out and said, we didn't vote for him. We don't support him, but actually he's president. He's doing the inauguration. He's invited us, and we've come to realize he really loves our music. So we're delighted to play, because that's what we should do as good Americans for him. And I thought it was fantastic, because how the world has rotated, that we have a Republican, fairly fundamentalist in many senses, Republican president turning up with this group. And I don't know, the other revelation for me was the fact that actually I realized that not all the members of YMCA were actually gay. I'd always presumed they were all gay. Apparently they're not. I mean, we knew, and it was just incredible to see that, because they were certainly the winners. But it is interesting. I mean, he approaches things with a deal maker's mindset, and he has that incredible aura of the salesman built through his TV career, and immediately he has created, I think, a very, very interesting, again, you may like them, you may not, but a very interesting cabinet team.
Oh, yeah. Yeah, whether you like them or not, it is interesting. And because he brought enough, how he did it, I don't know, but I think that was just the mood of the country and the disappointment. But I think your point, Patrick, is so well taken. And I always think back, and to quote Will Rogers, I don't belong to any political party. I'm a Democrat. And I think it's a line, that's one of my favorite lines from Will Rogers. And one of the things that Trump does very well is he builds on what Lee Atwater, who was the Republican political operative in the 80s, he died very young.
Yep.
But Atwater was trying to get the Republicans to build a big tent, make everybody inclusive, cut this country club nonsense. And where was Lee Atwater going? Black churches. He said, why have you written off the black votes? Oh, Lee Atwater was a brilliant political operative. I'm sorry, Karl Rove couldn't carry his lunchbox. And I think Trump builds on this. He's, as you say, here comes the Village People. They said, we didn't even vote for him, but we appreciate it. Be inclusive. You may actually wind up in some very serious dialogue and learn from each other. Because, the great thing about the American political system, and Bill Clinton was the master of it, is that you take everybody else's ideas and co-opt them for yourself. That's the resiliency of the American political system. When we lock ourselves in, we get really stupid very quickly. And that goes to the Republicans and it goes to the Democrats. You have to be much more flexible. And they really needed to listen to Bill Clinton and learn a little bit more about how to co-opt the best ideas and bring them to your own.
Yes, I mean, I think one of the things that strikes me just from afar is that it seems to me part of the reason behind Trump being elected was because people really wanted an outbreak of government, not necessarily dictatorship from above, and I think it will be. I mean, it'll be a very, very interesting test, because what Trump is going to have to do sooner or later is stretch over the aisle and do something which actually we haven't seen for umpteen presidents. I mean, I think Clinton is really the last president who governed by making sure that he had people from all parties on side. And that's going to obviously have an impact on markets. Now, we're going to talk about those market impacts in a second. But first of all, Ira, I'm curious, give us a bit of feedback. What do you think from a market's perspective about some of these key hires in the Trump administration?
Well, the energy picks, meaning the Department of Energy, Chris Wright, and then, of course, Burgum, which is even more important from the Interior Department, because, okay, it's drill, baby, drill. Again, that's a salesman pitch until you get the money people, and they're going to be reticent. The smartest people I know in the energy sectors talk about how reticent Wall Street and others who've gotten badly burned, even with the success of fracking, but they put a lot of money in and never got any return. So they're going to be slow to do this. Interestingly, we'll get into it. I think Canada, and it's not as a 51st state, but Canada as an energy source, especially with that Keystone pipeline, becomes much more important. And that's why the talk of 25% tariffs is, again, he just spews stuff out. He throws it against the wall. He's it's like somebody who just tries to keep getting it. He needs the attention. But do I think we're going to see 25% tariffs? And I know I'm preempting a little bit on Canada or Mexico. No, but it's a nice discussion point. And then you can sit down and say, well, how can we work around this and not have to do this? But there's no way that they're going to do that. And then my favorite pick is Scott Bessent, because he comes out of the world that we live in, Patrick, global macro. His mentor, well, he worked for Soros, but his mentor is one of my favorite people and impresses me always, is Stan Druckenmiller. And here we have somebody who's actually going to perform real thinking, because he's a practitioner. He's just not a theoretician. We've had too much theoretician. Janet Yellen, I really offered up a lot of respect for her one time, but she's just too theoretical and really no practical experience. All those trips to China where she accomplished less than nothing.
Josh Lerner.
Sorry, I apologize for that. So Scott Bessent to me is the most important person to watch. Lutnick, I don't have much to say about, but Bessent is good. And as I say about Scott Bessent, and I would tell your listeners, go give Steve Drobny a little money and buy the book Inside the House of Money. It was written in 05-06, and it was it was interviewing global macro traders, and it's worth reading. In the chapter with Scott Bessent, the interview, these are all interviews, so is really, you can get into his mindset somewhat, and I think that's very important. Now, I think Scott Bessent, as I say, he'll be very creative. Will he be successful? Well, we don't know about that. And what will he do? We don't know about that either. I listen to all these people who are conjecturing, but as we like to say, those who know don't talk, and those who talk don't know. And we know a lot of that is going on. But he will be creative. That much I can be assured of.
And it is very interesting, because certainly, I mean, I think you mentioned Howard Lutnick, and one thing I would say about Howard Lutnick is, again, he has an incredible pedigree as a man who's very good at execution. He's also pretty tough. I mean, you don't get to run a multi-thousand-person interdealer broker without managing to have quite a degree of toughness and ability to manage and organize situations. And that's something that I see as a strand through these people. I mean, Scott Bessent has physically managed billions of dollars. I mean, not quite as much as the USA has, but certainly enough to give him a scale proxy that he's got a chance to work out what's going on. And I think Lutnick has that incredible ability. You know, he's gone head to head with Terry Duffy at the CME and all of the other heads of all of the IDBs, etc. He doesn't fear anybody. He's got a very good track record as an entrepreneurial businessman, building up BGC, developing new initiatives. And that's important. And also, I have to say a footnote. I mean, one person is great, because coming out of our parish of exchanges where we first met via the CME, you know, it's great to see the Office of Small Business Administration having a champion in Kelly Loeffler, because I think there is no better woman to run that. She understands what it's like to be an entrepreneur, both as a success and the issues that you can have as a result of it. She's a very coherent manager. And it's good to see these exchange people or people from the IB world rising up, which is absolutely fabulous. But it does raise an interesting question, because, I mean, the early stage honeymoon has been a honeymoon for Trump, and obviously we're you know, somewhere in early February now, and we're looking back on what has just been a matter of a few weeks. So it's far too early to discern trends from what's going on. But the execution in that first weekend, where he won a de facto trade war against Colombia in a matter of 3 or 4 holes of golf, I mean, that was quite incredible, because it certainly suggested an administration that's going to execute. And I think that's got to be something that markets will take positively, that there is a great deal more organization to this Trump administration than there probably was in the first one, which I have to say, you know, started with more of a sort of a whimper than a bang looking back on it.
Yeah, I think that's right. And I think what Trump learned, and we're learning that from him, he did his work here, and he picked people, whether you agree with him, as you point out, or not, doesn't matter. They are going to push the envelope. And from my perspective, that's good because I'm an envelope pusher. Again, as I tell people, I'm the fourth boy in line, and my whole existence was always having to think as an outlier. That's the way I just view the world. So I love people who push at the envelope and try to reach beyond their limits. I think Scott Bessent is definitely like that. I am where it goes from, I don't know, but you know what? We've done things, continually. Who was it? Einstein says, the definition of insanity is trying to do the same thing over and over again and getting the same results. Well, that's what government is. So to have some people who may shake it up, now you could say they're going to fail at things. These are people who are superior failures because they will fail until you get it right. And you could be a Musk hater, but when you watch what SpaceX did with bringing that rocket back, it took a lot of failure to get there, but that's a success. So yes, government is a giant ship and it takes a while to turn, but the staid status quo that we've seen, it was not America at its best. Again, and they're all talking about, again, with to make, if we go to deep seek, as a Sputnik moment. Now, I'm old enough, and I was reading Weekly Reader in school at the time to understand what Sputnik moments meant and how it kicked the government in its ass to really push itself to do more. And what did John Kennedy say? We're going to the moon.
Yep.
And they went to the moon. But that took great creativity and great energy, but it's capable of it. I read, do you know what's her name? Marzucato? She wrote a book called The Big Con.
Mm-hmm. Yep.
And to me, she's a really good global macro thinker, but she wrote The Big Con. And a big problem with government is you put these people in there and they spend a fortune on consultancies. And that's what she calls the big con. And it's people who used to be really good in government at doing things. They're not good at them anymore because they just push it out to the consultants and the consultants come back. And I learned, I'll tell you what, because I was on the board at the CME and we dealt with, I think, with McKinsey, and I learned about consultants. I said, this is an experience, and I know the consultancies will hate me, but I'm so old it doesn't matter anymore. All it is a cover your ass deal. That's why you hire consultants, because then you have somebody to blame. And as one of my favorite people in the world, he passed away during COVID, is this Rabbi Abraham Twersky. And Twersky, in citing Maslow, said we need 4 things to survive: food, clothing, shelter, and somebody to blame.
That's great.
And it never leaves me because it's so true. You need somebody to blame. I just love that he's a psychiatrist, and really he treated 44,000 alcoholics and drug addicts. He died at 92. He was still correct. But this is a person who really saw life and understood life. And that's how we operate. And that's how government is. There's always somebody to blame. Corporations are the same way.
So it's very interesting, though, because obviously one thing which is quite different is this whole impetus of Doge trying to get government efficiency, which frankly strikes me as almost an oxymoron in so many ways. And as you say, they brought in Elon Musk. Ultimately, a very Marmite character, as they would say on the other side of the Atlantic. He really divides opinion quite stunningly. I think it's fair to say that few people in history, other than the devil himself, has managed to be such an incredible catalyst for incredible diatribes as you can get. Maybe sometimes I think he's the first friend of Trump in order to manage to make Trump look better instantaneously, because it's measures the whole thing. But as you say, he gets things done through failure, and certainly the Apollo mission. Well, I'm sitting here, as we're recording this today, I'm sitting 75 miles away from Gemini, from Friendship 7, where that first landed after it orbited the moon. And you make a great point about this whole deep seat and all of these sorts of things in AI. 3 weeks ago, it was a case, or a month ago or whatever, it was a case where AI reigned supreme, and it was all about open AI. They were the greatest thing on earth. They were valued at $200 billion or whatever. And then suddenly, a couple of weeks ago, these guys come out and they say, oh no, we got this thing called DeepSeek. And by the way, hello Davos. I thought it was interesting, by the way, that Chinese AI comes out at Davos. I thought that was quite curious, because all the energy from Davos had been sucked to the inauguration at the same time. But you get them come out and they say this, and you're right, it's just like the space race, because everybody had everything under wraps. And if you read back, I mean, I do not remember this, you do, but you look at early 1960s, suddenly Gagarin, as we would call him in English, goes off, rockets his way around the Earth, and actually NASA and the US went into a state of torpor, very similar to what we saw when DeepSeek was announced and the stockholders of NVIDIA took fear. Suddenly everything changed. But actually what it's saying is we're in an era of incredible evolution. There's no big moat. And it's fascinating. Maybe you disagree, I don't know.
No, it's so true, and I'm laughing because you said Yuri Gagarin. So because my name starts with Y and my middle initial is G, in a school play, I think I was in third or fourth, fifth grade maybe, and we did a play, and I got to play Yuri Gagarin because of my name.
That's incredible. It's incredible. Yeah, I mean, but it is incredible because it's exactly the same impetus, because NASA was completely confident it had this, it got everything together, and suddenly the Russians send up Gagarin, they put him around the world a couple of times, bring him back to Earth safely, and the US establishment was shocked.
Yeah, and it led to really finally doing really good research and development. And look what came out of the space program. I mean, look at the technology, the computers that were on, the transistors. There's so much that went into it that benefited society. And it's, the as the economists call it, externalities that came out of that research were unbelievable. And I think that's where, Musk is looking at, and, because they think that government research spending can be very productive. Of course, not if we're studying the ridiculous things, and that's what they're going to go through. And yeah, they're going to step on a lot of toes, but you can't make the changes without stepping on toes. And there's a lot of entrenched people making an awful lot of money for ridiculousness. It's just a fact.
And that's always the problem, because also you're usually stepping on the franchise of people who are bourgeois with good contacts to journalists, can speak, elucidate, and explain why their position is absolutely should not be challenged. And that's obviously a problem. But I mean, let's take this back a bit. How does that, do you think, then start to impact upon markets the world over?
Well, first of all, we have to look at the debt markets, because the debt situation is a very serious situation. And, and Powell, I don't know if you happen to watch that interview. Powell did an interview with Andrew Ross Sorkin at his data, whatever that is, data book. And he sat down with him for 33 minutes. And he asked Powell a couple of questions, which I found fascinating, because nobody asks them. I watched the whole press conference yesterday, 21 questions, and I think there were 3 or 4. The woman from Axios, Courtney Brown, she asked the only relevant question about quantitative tightening. Urbanovich from The Economist, most of the questions, they just want to hear themselves speak. It's the problem with journalism. Sorkin did ask Powell 2 questions I thought were interesting. One was about fiscal dominance. And is the Fed being held captive by fiscal dominance? Now, Charles Calomares, who's at the St. Louis Fed, wrote a paper in, I think it was 2023, citing the problem of fiscal dominance and what it was going to cause for the entire financial system of the world, as well as the United States. And Powell brushed it off. He said, we're nowhere near fiscal dominance. But we're going to come, because that's a very important issue. The second question was one that if I was sitting in that room yesterday, I would ask Powell again and again, why are gold prices so high? Mm-hmm. Especially because he likes to talk about, as they all like to talk about all of a sudden, and Lagarde talked about this morning too, R star, or what is basically the real interest rate. That's the nominal rate minus inflation or plus inflation. Now, I'm a global macro guy, so that's critical to me because that's really the cost of money relative to everything going on around it. And Powell said to Sorkin, well, he views gold like Bitcoin and cryptocurrency. It's just speculative. Well, that's just pure hogwash. I don't know if I can use the bigger word, which should be said. It's total BS because gold is always reacting, or historically always reacts, to the real yield on money.
Yeah.
So when real yields are negative, as they were through the whole transitory period, gold performs pretty well. But once real yields turn positive, and and using the Fed's data or the BLS data, we're at the equivalent of about 2% real yields. Because I use short, because if you're fighting inflation, you're not doing it with the long end. The long end is a reactor. It's the short end that drives the battle. So right now, using their data, we're probably at around, let's say, 1.8, 2%. That is really usually a great negative for gold. And I thought that would take place because I had orders for a long time to buy gold down at 1580 to 1620, thinking that, well, when the real yield goes up, never happened. And right now, as we're talking, gold is making all-time highs. As gold's up $50 for right now, and that's to the minute because I have my screen up. So for him not to answer that question is so disingenuous, which tells me he really doesn't understand. He's a technocrat without real experience. And that's why Scott Bessent he's going to run circles around Powell because he has real experience, not theoretical. He reads, he's a prolific reader. He talks about it all the time, and he understands economic history, and his understanding of it has yielded him great success. So this is going to get very interesting. But those are the things I want to know from Powell. You can't, because even Paul Volcker, and I know people who used to sit with Paul Volcker, and Paul Volcker maintained that gold was his enemy. As a central banker, gold is your enemy. Now, that was an interesting comment coming from Volcker, being that he was one of the people highly responsible for Nixon closing the gold window in 71, because he was an undersecretary of Treasury, and he was proposing that. But he viewed gold in that way, and I think that's correct. And where Powell has no answer. And the issue of fiscal dominance, and this is what Scott Bessent is walking into, because he has to deal with this debt situation, and this is a very, very critical area, and for Powell not to be concerned about it. But I will say this: Powell gets caught in his own lie yesterday, because he says he's not worried about fiscal dominance, but when Urbanovich, the journalist from The Economist, asked him about the debt and and why, with the rate cuts, have bond yields or duration yields gone higher? And here's what Powell said: "It's a term premium story." Well, duh. A premium story is exactly what fiscal dominance is about. So, you know what? I'm sorry. And he should have really called. Urbanovich didn't press him on it, but he should have. But I will say, Courtney Brown's, because she pushed him and needed to be answered, because quantitative tightening. And so we're going to come to Bessent. Now, if I read Scott Bessent right, and this is going to be a heretical point I'm going to say here. If I'm Scott Bessent, and don't jump up on this, Patrick, when I say this, I hope for a Liz Truss moment and basically get a failed auction. Because the only way you're going to be able to punch these people in the face and make them sit up and pay attention is if something dire happens. And of course, a failed U.S. bond auction would be dire.
That's fascinating. It's really, really fascinating, because of course it would be dire and it would reset the thing. I also I do find it amazing, just in the kind of the micro of the macro, that you hear Powell equating things like Bitcoin and gold, because I just don't buy that one. I mean, I really fundamentally don't. And for two reasons. One is because gold actually can be something else. Bitcoin is just pixels. I mean, it is nothing. I mean, in that sense, it's just fiat. There is no underpinning value except the fact that there's only 21 million of this particular set of pixels that have been arranged. The other bit that I find shocking about that is you're talking about gold price action. This is in the week when we're recording this, and you look at that and it's completely contrary to the price action of Bitcoin, whereas Bitcoin just behaves like a speculative asset. And in fact, the first thing to fall as soon as everybody got scared about Nvidia the other day was you saw Bitcoin falling, because it's essentially the province of the over-leveraged and the highly ambitious who perhaps don't quite have, in my humble opinion, a straight understanding of risk management when they get into these speculative trades on Bitcoin.
Yeah, no, I think you cited it. It's absolutely perfect. And you know what? And we know this, if we go to the Constitution, it's only the government, that the United States government, what is it, Section 8, Article 1, Section 8, that talks about it's Congress who has the power to create money. And it's also, we saw in 1934 with Roosevelt when he confiscated or basically relegated gold to a non-use outside of exchanging, between countries, but American citizens weren't allowed to hold it. And it's always what's made me nervous about Bitcoin, but that makes me an idiot, because I had people who I was talking to when Bitcoin was $100 trying to convince me to get long Bitcoin, and I kept worrying about the government's ability that if there was a terrorist situation or some other type of bad situation, that the government would just outlaw Bitcoin. Now it's grown, so that makes me an idiot, and I acknowledge my stupidity. But it has made me more aware of blockchain. And I think that blockchain becomes very important, and now people are talking more about stable coins, which, as you say, can be all fiat, right? Because I can create a stable coin, and there are a lot of different stable coins out there, and some, I think there's 400 billion in treasury bills backing stable coins, because they're only turning it into electronic money, but it has an asset back. Well, that's fiat currency. Or I could put gold behind a stable coin, right? I think that's what the Chinese, in their desire to create a central bank digital coin, which is basically a stable coin. And Leo Brainerd actually pontificated in one of her speeches 3 or 4 years ago, which shocked me. And she talked about using a central bank digital currency backed by gold. Yeah. So, you know what? It's out there, but the metals are, again, well, we had the ECB cut, but I don't think that had anything to do with them. For some reason, the metals are really having, silver's up, we're back over 3250. There are things going on here. What do they sense, and what do they, because that's what it is. This is not speculative, and it hasn't been, because again, let's go to our star. They all want to talk about neutral rates. And again, Powell was talking about neutral rates. So in reference to neutral rates, why is gold going higher? And I want to solve the why, because to be an investor and a successful investor, I mean, I could ride the momentum, but I need to understand what the underlying push is, so I have more confidence in whatever decision I'm making.
Yeah. And I mean, it's very interesting then to look at not just how the US is coping here, because as you say, it's an unclear picture, particularly in commodity markets. Some people are booming, some other places are at the moment not quite clear on what's going to happen. And I think your Canadian points earlier on are very, very well made. And I think that brings us back to the point that Trump is ultimately a negotiator, and he starts, like all New York real estate dealers and wheeler dealers, he starts from a ludicrous proposition, then carries on. And I also have to say, as a sidebar, I'm most fascinated by how he looks at Gaza, because he looks at Gaza in one sense only, as I do, which is it is the world's most incredible beachside hotel strip that somehow or other a terrorist organization has managed to completely tear limb from limb. I mean, it is just, everybody could be as rich as Singapore, because that's a place where you could fly to in 4 hours maximum from any part of Europe. You could be there all winter long. It's very pleasant weather. It's just mind-boggling. And watching the way Trump's mind looks at this, and he just goes, well, that's a great piece of real estate. And you can instantly see the mind going, casino, this, that, the other, all the way along. It's quite fascinating. But looking at markets overall, I'm curious about the rest of the world, because it seems to me that the rest of the world is, even after the Trump inauguration, there's still quite a lot of denial out there that this is really happening.
Oh, God. Oh, yes. And yet they're coming in and they want to be problem solvers, right? That's the most important thing. That's what I see from this group. They want to solve some of these problems. And I'll tell you what, if you don't think that the debt problem is a problem, you live in a land that I can't fathom, because debt is always the bane of any great nation's existence. Listen, Britain allowed itself to get sucked into World War I, maybe helped get themselves sucked into war, and they never recovered from it, because the amount of debt that they took on has just crushed them. We certainly know what happened with Germany. Debt is a very serious issue, and to just sweep it away and pretend is just wrong. And it's going to cost you. It may not cost you and me. I may be dead. I'm in my 70s. I could be dead very quickly. But there is going to be a price to be paid. It's always a price to be paid. And I, for several years, blogged about, and I'm going back to 2020, 21, even 22. And I would say to people, I said, once, because a very good friend of mine, Kevin McCarthy, we were in graduate school together, and we would talk about this. And once the interest on the debt exceeded the defense budget, you were going to get into a very difficult situation, because you were going to have to start cutting discretionary programs, or just keep printing money and get enough inflation where you can destroy the debt and get yourself out of it that way. But that comes also with a lot of bad political fallout. Ask the Democrats, because the inflation, which isn't even anything really yet, supposedly cost an election. I don't believe that. I think there were a lot of other issues. I think it was the way that they initially tried to dance around it when it was 8-9%. But these are serious issues, and the debt is a serious issue. And if that's not job one for Bessent, I'll be amazed. And what makes it even more serious is the fact, when you are a reserve currency, you not only have the Fed keeps the nonsense of a dual mandate. They have a triple mandate, because they're the bankers to the world. And you saw that in 2020, when, as COVID was setting in and we got into March, and they opened up swap lines to provide dollars to all these countries who were really struggling. And, I can tell you that I saw that coming. I said they're going to have to open swap lines. I blogged about it, and 3 weeks later they did, because everybody was choking. And I'll tell you what, they talk about a strong dollar. And this is a real problem for Trump, because he really understands, as you rightly point out, he understands the economics of a real estate developer, which that's all about leverage and catching a good wave. But it's certainly not understanding the underlying element of debt, because their solution to debt, of course, is bankruptcy. Bankruptcy is a non-starter when you're the world's hegemon. Non-starter. So that ain't going to happen.
And it's also a concern, actually. I mean, in that sense, it could be a Trump shortcoming, because actually the other thing real estate agents love is a bit of inflation. Because if a bit of inflation comes in during the course of time, when they're owing a load of money and they're building a building, and suddenly what they perceive is going to be a sale at $1 million becomes something they can sell for 1.2 or 1.5, it's absolutely fantastic for them, because they're the ultimate, in many respects, beneficiaries of that sort of inflation. Which, do you think, therefore, because I'm concerned for the following reason, which is the inflation genie got out of the bottle. It's sort of back in the bottle at the moment as we speak, and it seems to be coming down. It seems to be getting better. But I'm not really sure that anybody anywhere in the world learned their lesson from 2020, 2021. And we've got this generation now where you and I look like old guys who remember what inflation could do and what a ravaging effect it had over decades, like the 1970s. People seem to have forgotten that. They've forgotten about high interest rates. People are still saying these interest rates are historically very high because you got roughly like 6%, 5% mortgage rates in the USA, which is nothing compared to what you can potentially have, but it's high compared to what we've had the last 20 years. Is the inflation genie back in the bottle? Do you think there's a risk the world over?
Oh, again, it's not back in the bottle because it all depends how you're going to deal with the debt. So if Doge, now they've already cut it, at first it was 2 trillion, I think they're already down to 500 billion. And you can see the pushback that you got on some of the stuff that they want to cut. So it all depends. If you cut spending enough to reach some of their targets, you are going to crush the economy, because this economy has been running. American exceptionalism is the exceptionalism of fiscal stimulus run wild, financed by the Fed. Look at their balance sheet. Look at all the debt that they bought. And not only them, but don't forget, it's not that long ago, 3 years ago, they were pounding their chests about how there was 18 trillion. That's right, 18 trillion of nominal negative yielding sovereign debt, right? So where did that go to? It went into all these speculative things. Remember all SPACs? I was like, what the hell is a SPAC? So it's been built on fiscal stimulus. You cut that fiscal stimulus and actually start slowing it down enough, the economy is going to slow, which is going to create more debt, by the way. So you get into that bad debt spiral. You have to be very careful here. But if you don't do it, then you get into the upward spiral, as you're talking about. The inflation genie pops out because the only way for them to solve the debt riddle is through inflation. And you know what? This is not new. This is historically precedent. In fact, let's go back to Ken Rogoff and Carmen Reinhardt's book. This time is different. And he said, and Rogoff really, lays it out, and people forget about it. But what was the solution? Once you get over that 95% debt threshold, which starts to really harm the economy, there's nothing like a good 4 to 6% inflation with low interest rates over the next, time period to solve that riddle. Well, we found out that that's not such a good solvable riddle. So yes, you need growth, but if I'm right that they have to slow the economy by cutting government spending so dramatically, well, then the equity markets are way overvalued for the next 2 years. That's the way I look at it. But right now, I'm as wrong can be. So,
yeah, it's quite incredible, and it's amazing how the equity markets managed to shrug off that incredible new think about the whole way that AI was reframing the economy. And it's also incredible, the numbers, because the way that the US economy, and we never thought we could see, I never thought we could see that, where a handful of companies could be so dominant in a massive economy like the USA. I mean, we saw it in Spain and 1999, 2000, where their telecom monopolist was essentially so big it was moving the Spanish index. But that was 20, 30 leading Spanish stocks in the IBEX. That's a totally different conundrum to the S&P 500. Whereas you look at it today, and I mean, actually, I'm going to give you a brief rest, Ira, for a second. I'm going to move to one of our videos, because we've been talking about the world's top 100 top 100 companies recently. And think about this: when NVIDIA had its terrible moment with the launch of DeepSeek, the AI from China, the other day, it lost $450 billion or thereabouts in one day, which is the equivalent to the entire market capitalization of the bottom 3 companies in the world's top 100. And those companies are utterly massive compared to everything that's listed pretty much everywhere else in the world. However, let's talk about, well, Europe and the top 100 companies in the world in this short video, which has been on our social media streams recently.
Yeah. No, can't.
Meanwhile, in Big World, looking at the world's top 100 companies, we were talking before about the relative decline in Europe. 46 companies in the top 100 listed entities in the world in 2007. That's dropped to 19 in 2025 as America dominates. And before the European Union gets overly excited about those 19 European firms, only 11 are in the EU's 27-nation bloc. 5 alone are in the UK, and 3 come from small but fiscally perfectly formed Switzerland. The leading European firms show the difference in the US's core Schumpeterian ethos, where innovative US giants Apple, Nvidia, and Microsoft are at the forefront of the top 100. Europe's leaders include century-old luxury brands such as Hermes and LVMH, although the largest European firm is the Danish pharma company behind anti-fat drugs like Wegovy, Novo Nordisk. For more in Big World, like or follow. And there, of course, we have the interesting moment at the moment, which is President Trump going to buy Greenland, or is he going to basically ban Lego and Wegovy from entering the US market as an attempt to get the Danish government to come to the negotiating table? Our book of the week this week, ladies and gentlemen, we're going to come back to talking about the global macro picture under the Trump era with Ira Harris in just a moment. Great book. I am sure Ira has read it and loves it. The Crowd, a study of the popular mind, written in the late 19th century in French originally by Gustave Le Bon. He was highly instrumental in understanding and creating the theory behind why crowds are useful. Last week, of course, we had a book of the week, which was James Sorowiecki. That was The Wisdom of Crowds, which was in many ways a 21st or 20th century update on the same sort of tome. And I always love this quotation from Le Bon himself. The masses have never thirsted after the truth. Whoever can supply them with illusions is easily their master. Whoever attempts to destroy their illusions is always their victim. And I suppose in many ways that probably boils down to the last election. Both sides, the Democrats and the Republicans, can agree on it. They just don't quite agree on the cause of who was the person that was managing to fool the masses in many respects. I'm with the fabulous Ira Harris today. We're recording all about the fascinating global macro world on Trump world. Talk to me, Ira.
Patrick, can I take a break for 1 second?
You certainly may.
Okay, I'll be right back.
Go right ahead. We'll just keep recording now, ladies. We can just cut this out when we get there. Everything good with you? And from the crowd, we come to global macro. We're here today with Ira Harris. We're discussing the wonderfully exciting world of global macro outlook with the Trump world that has now taken over in so many ways and dominate what goes on. It is fascinating when we look at what's going on with the dynamics of the stock market over time, and certainly how it looks now with the huge technological bias, Ira, of what's happening. But one thing which struck me the other day, actually, and this is slightly off the Trump world tack, but I was intrigued. I think it was Ken Fisher came out with a fascinating piece of analysis, which was, do you know what? Europeans are now so pessimistic about everything, and their markets look so horrible due to everything that's been going around Europe, and Europe is in such a terminal decline. I'm half inclined to say we should be buying European stocks. I thought that was a fascinating contrarian view. I don't know what you think of it.
Well, first of all, you got the DAX at all-time highs. Now, yes, they've way underperformed the U.S. and even Japan of late, but they are starting to get moving. Now, I'm actually long some European stocks, and I'll tell you, because my analysis always is global macro. I look at the big picture, and then I'm very poor at micro. My wife, she's a far more sophisticated financial person and can pick stocks from bottom up, not my strength. But I see some of that, and for a couple of reasons. Number one, I think because one of the things that Christine Lagarde, and she's a terrible economist, but she wasn't brought in for her economic acumen or market sense. She's brought in because she's a very good politician, and she is struggling in her attempt to create a capital markets union. But Europe without a capital markets union is destined for continual mediocrity. They need a capital markets union to make them more efficient. They need a central banking authority, and they need a centralized tax harmonization, which is basically surrendering your sovereignty to Brussels. Never an easy task, never any delight to it. But if they're going to keep calling themselves the European Union, these are the things they should have done them, as the great Bernard Connolly wrote about over 30 years ago. They should have done them before, but they were in a hurry to bring the currency out, and they let everything else fall in abeyance. But that has to end. So if these get done, then I think Europe becomes really will do very well. If they don't, I think the world will face a very difficult situation again because of the huge amount of European debt and the low level of its interest rates. But that's because everybody thinks it's the Germans and their credit card who guarantees the European Union. And that's going to be they need to resolve this issue because the debt pile grows and grows and grows. There's another issue of debt. But that being said, I've been long. Can I name stocks? You know, I'm not.
Yeah, go ahead. No, sure.
I'm not telling you, but I've been long Commerzbank for the last three and a half years because it's so underloved, and rightfully so. The German banks were terrible, but I thought, yeah, at this level, and the ECB started talking about putting together a broker-dealer market, you know, to trade the sovereign debt in Europe. But one of the initial criterion that they talked about was you had to be domiciled in Europe. They did not want the Goldman Sachs of the world to operate from New York running this show. So I said, so if that's the case, you may as well get into a bank. I wondered whether like somebody like Ken Griffin or somebody of that stature would buy a European bank, and why not Commerzbank? They were busy cleaning up, so much so that they've actually now, in the last 18 months, declared a dividend for the first time in a long time. So that's actually been a pretty good investment. But I see other Europeans. One of my favorite in the world, and it's based on the hope of some type of ceasefire in Ukraine, Russia, is ABB, which is really Swedish and Swiss. So it's not really in the European Union, but it's such a dynamic engineering type of business that if Europe does what Draghi proposed, you know, spending $780 billion a year to help stimulate the European economy and get it to the level where China and the US are at, but nobody will benefit more. And I don't mean that, it's not nefarious. It's just they're the biggest engineering concern. So if this terrible situation in Ukraine ends, I would look for them to get huge contracts because they're the only ones capable of doing it. And they're also very big in the margins of the green energy business and power business. So, I mean, but it's not a whole lot that I like. You saw what happened with Siemens Energy on Monday, right? They killed it off of the deep seek.
Yep. No, and it's also interesting because there's also this bifurcation, and I don't know whether they necessarily make great investments per se, but it is interesting to look at one of the top companies in the 100 biggest shares in Europe, biggest shares in the world from Europe is LVMH. And it was very interesting to see the entire Arnault family over there, over the shoulders of the tech bros at the inauguration, which I thought was fascinating because there was a company that wants you to believe that they are the ultimate European classic historical elegance fashion upmarket brand. But actually what they're doing is they're trying to protect the fact that they've got huge amounts of factory capacity already in the USA. They just don't want to necessarily advertise it because what everybody wants to think is that they bought something that was handcrafted by a Parisian artisan rather than built by some guy in Charlotte. No disrespect to the good people of Charlotte, I say incidentally. And also you get the same sort of impact with cars. I think it's hilarious. You know, you talk about tariffs on cars. Lots of car manufacturers get very upset. You never hear a word out of the German car manufacturers. Why? Because they've already all got their factories in the USA and have had for years. You go buy yourself a new BMW sports car and they invite you down to, I think it is South Carolina, and you go and drive around their test track.
Spartanburg. Yeah, they've been there. And you know, the Japanese too. So, you know, Trump spews a lot of shit. Okay, I got it. I know that. That's what he does. He just throws it out there. But the Japanese have been building cars here. Honda, and now we talk about Honda and Nissan. So I think Japan is even potentially more interesting here. And rather than tariffs, I look at the dollar because because when you talk about the global effect of the dollar, you're talking about the effect on debt, because there's a huge several trillion of dollar-denominated debt outside the United States. And when these emerging markets who are saddled with a lot of dollar-denominated debt, when the dollar goes higher and interest rates are higher, the servicing of that, the cost of servicing that debt are enormous. So you're just sucking growth. A stronger dollar is sucking growth out of the global economy. And if you think that, well, we're going to bring it to the U.S., well, it's not going to. The global economy, the debt situation is going to become. That's going to mirror the 70s and 80s, when what we called the third world then was choking on the debt that it took on in order to pay elevated energy prices, which were, of course, all financed by the big New York banks, from Citibank to J.P. Morgan. That's why they wound up in trouble. And we're going that same road again. The amount, look at Brazil, and I find Brazil interesting technically, but yesterday the Brazilian central bank raised rates 1%, because this month, January, the Brazilian real made all-time lows. Now, it's since making that low early in the month is climbing back and may actually take out December's high, which for technicians is a very important, well, could be. But we're sitting right at the number. As I sit here, I look at dollar real, so we're sitting at 5.88, which is the bingo number. But they raised rates 1%. Well, how much higher are these emerging markets going to have to raise rates in order to protect their currencies? Because again, they don't want the weaker currency. This is a different game going on now. Even China, which everybody said, they're going to devalue, the yuan is at 7.17. And everybody said, the yuan's going lower, the yuan's going lower. And, it's kind of been sitting here in this range. The weakest of them all has been Japan, but that's because Japan has slow walked raising rates. And I think it's been a grave mistake, but that's a different discussion. And I don't think the world is really comfortable with the yen so weak. So I'm just waiting to hear. This is one area where I'm waiting to hear a lot more from dissent. But interestingly, he had a teleconference yesterday with the Japanese finance minister. So for their first meeting, and now Ishiba is actually, I think, coming to Washington to talk to Trump, to have a sit down with Trump February 7th, which is very important for him. I follow Japan. I'm a follower of Japan. One of my favorite sites is Observing Japan, which is actually written by my son Tobias, who's a Japan expert. So, and that has nothing to do with me. My kids all come to their professions on their own. But he's fluent in Japan and covers Japan very well. So if anybody out there is listening, you want a good place to go read about political and economic Japan, Observing Japan is really a good spot.
Fascinating. Well, I mean, there's so much in the world we could talk about. And I suppose one thing I would also say is generationally, it's quite incredible. You look at the Brazilian currency and people in this generation are thinking that Brazilian currency is a bit wild. Whereas for those of us who've been through half a dozen different kinds of Brazilian currency, it seems to be relatively calm by compare, which is quite remarkable. And I think your point is very well made as well, where you've been talking about the Japanese yen. My interest in the Japanese yen at the moment is that I notice that, and maybe this is an anecdotal indicator, but my social media streams like Instagram are all full of people telling me that you've just got to go shopping in Japan right now because it's so cheap if you're holding the dollar. And when you see that getting all the way to the bottom, you've got to start thinking, well, how many decades has this been? Surely, but surely there's a rally coming in that Japanese yen, because the Plaza Accord seems a long time ago, doesn't it? And it was only, 40 or 41 years, not even 39 years, 38 years. Yeah, 2005, 2006.
40 years in September.
Yeah.
But Patrick is so, because they're comparing Besant to James Baker, who orchestrated, right? That's all there's a lot of compare and contrast. But it's also funny that you brought up shopping in Japan, because you were talking about LVMH, right?
Right.
So did you see their numbers that when they came out with them? Enormous sales in Japan. Now, the article that talked about because of the currency. but they didn't finish. It's not Japanese buying it. It's all the tourists going to Japan.
And buying. And they're buying in the arbitrage. And it's so ironic because actually that arbitrage at the time of the Plaza Accord was the opposite way round. And actually in 24 Faubourg Saint-Honoré, the infamous epicentral shop, they used to effectively limit how many people could buy their Hermes scarves there. And the same sort of thing happened with Louis Vuitton stuff up the street, et cetera, et cetera. And that was how those two titans made huge amounts of money by actually restricting the supply to the Japanese. And now it's the opposite way round. Everybody's flying into Japan and picking up what they deem to be incredibly cheap stuff compared to what it is as an arbitrage in the rest of the world.
Yeah, and as much as tourism was up, the Japanese middle class, when Kishida said goodbye, and then we got the government and the new leadership of the LDP, in the polling numbers, the biggest issue was from the middle class complaining about inflation. Yeah, and in fact, a lot of it driving it is that tourism is up so big in Japan, but people are coming and buying and pricing them out. So they wanted actually a stronger yen, and they haven't really responded to it yet. And Ueda, who took over for Kuroda as the head of the Bank of Japan, they raised rates this week, or I'm sorry, last Friday, but it was minimus, especially when they talk about, again, the real yield. There was a speech given by the deputy on January 14th, I have it right here because I've read it a few times, Japan's economy and monetary policy, and it was issued by Himino Ryozo. And he talks about R* and the real yield. And that real yields in Japan are negative. And yes, Japan has a problem because of their huge amount of debt, but Japan doesn't have the same problem as the US, because Japan's debt problem is not an international problem. Yeah, Japanese bond prices can be an international problem, but it used to be, I don't know what the number is today, but it used to be that 97% of Japanese debt was held by domestic Japanese. Yeah. So, that's why when they were in deflation, nobody minded, because that's the opposite of inflation. Prices were going down. So even if you were only getting 50 basis points on a 10-year bond or 70 basis points on a 10-year JGB, your real effective yield was about 2.5%. So nobody cared. Now it's the opposite effect.
Yes, it's quite incredible. And then, of course, there's also, in fact, possibly a conversation separately to have at some stage in the future, which is the whole case of the world's demography, because that deeply impacts Japan as well, which is the other Instagram trope is come to Japan and buy yourself a cheap house because there aren't enough people to live in the countryside. However, that's for topic for a different day. Let me wrap this show up by just asking if you have any more thoughts at the moment, Ira, on where you think the capital market revolution goes next.
Well, I look to Europe because I want to see what they do with the Capital Markets Union. I think it's so important. Actually, it was interesting that Lagarde didn't even talk about it today, because she has talked about it. And one of the times the ECB had issued a paper on it, and she said it was going to be coming out, and it did later in the day. It's gone a little bit quiet here, but where do they go from here? I think we'll see. Outside of what happens in Europe, and I think that's very important, I think we'll see central bank digital coins. I do, because they want to get to electronic money. But in order to have electronic money, you have to have some underlying asset. And that's why those stable coins to me are so fascinating. Now, what will be the underlying asset? We can surmise. I'm working on one in my head now. That's all it does. It just exists in my head, which is always a dangerous place. But I think that the academic world has pushed for electronic money because they realized during COVID, when they went to nominal negative rates, that they know this, that if the economy were to slow down, and this is what every central banker and every academic economist, they want to control the business cycle. In fact, they want to eradicate the business cycle so that you don't have those ups and downs where you get layoffs and unemployment. And how would you do it? Well, they learned with the nominal negative yields that if you take money negative or low enough, their hope is always that people will spend it. And that way you'll smooth out the downturns. So if they could go to when the ECB did that, they're salivating. Oh, can we go to negative 5%? Which is basically that Patrick puts his money in the bank, and he has to pay the bank 5% for the right to hold his money, right? Well, you're not going to do that. That's a fool's game. And if you can buy gold, but if you really go into a deflation, gold I always thought would be good in a deflation because the way central banks will react to it. But that's, as you say, a whole other story. But these negative yields, nominal negative yields, are really going to be fascinating, and I think drive the stable coin more than anything, especially if they're backed by a combination of various precious metals or underlying commodities. I think this is the big discussion to come.
And I think you're spot on there, actually. I usually don't comment on the revolution goes next, but I have to just say, actually, in that original book, Capital Market Revolution, published 25 years ago, that was exactly what I argued for, was that eventually electronic money, the one that could win the day, would be the one that was balanced against an asset that the people felt most comfortable holding. So what a fascinating show, ladies and gentlemen. It's been brilliant to have Ira Harris here speaking to us once again. We've run slightly over our allocated usual hour, but it's been worth every last minute of it. Thank you very, very much, Ira. Coming next week, we're going to have an incredible show as well, ladies and gentlemen. That's going to be talking about multi-currency mercantilism, which in many ways is, well, some senses the antithesis, in many other senses a development from the thesis of just where is the currency market going to go, and can the almighty dollar manage to reign through. We've got the brilliant Kathleen Tyson is going to be coming on and elucidating on her most recent book. She is a woman of great substance, ladies and gentlemen. Don't miss that show as well. It'll be just as riveting as it was chatting to Ira today. Thank you very, very much for watching this show, ladies and gentlemen. A fabulous recording once again. This has been IPO-VID number 169, discussing the Trump global macro with the irrepressible Ira Harris. My name is Patrick L. Young. I wish you all a great week in life and markets.